Well, thank you very much, and thanks for the organization for inviting us. We have a fantastic panel, so I will not spend too much time in introducing, and they've already been introduced, but I do want to link to Professor Wang Gongwu's talk, which is as fantastic as always. I had the great pleasure as a director of the East Asian Institute to get this every week. Well, maybe not as long, but to get the thoughts every week and the relevance of the past for China's presence. And that is, Faulkner said, the past is never dead, it's not even the past. Well, nowhere is that more true than in China. And the notion of modernization is also a very important one, which starts from the mid-19th century. But Deng Xiaoping had his 4 modernizations, starting with defense, agriculture, technology, and science and technology. But Xi Jinping has his modernization, and that is Chinese-style modernization, and that he has been emphasizing as the means to realize the China dream, where everybody, well, a lot of people seem to have nightmares of that China dream, but it is basically what Professor Wang Gongwu said. It is modernizing China, making it wealthy and prosperous and among the equals in the world. That's in doubt. And it's maybe not in this room, frankly. This room is very informed about China, and I don't think that there's too much discussion on where China is heading. But if you look at the international popular press, there is 2 types of China. The one China is the peak China, and China is over the hill and it will go down. Adam Posen points to the political aspects of the leadership of the Communist Party as being, in the end, the death knell of China's future development. But in parallel, and sometimes by the same people, there is the unstoppable China, the China growing, and the China that must be contained. Clearly, China has a number of issues, and the days of 9–10% growth, they are far gone. As a matter of fact, they were already gone for more than a decade, if you paid attention, but some people still thought that sort of current growth rates are so much less. Well, they're so much less than before COVID, but not so much less than that. Clearly, there's a number of domestic factors that affect it, and we're largely going to talk about those domestic factors. But there's also international factors, and maybe increasingly they play a role. I thought I was really interested in Ken Rogoff's presentation, and he still lived in the China of 9 months ago, and that is almost a century ago, where very high investments in real estate, very high investments in infrastructure. That has come down with 40% since. So the chart that you saw is no longer valid. There's a dramatic rotation, if you want, of China, especially China's bank credit and investable resources, to manufacturing. That brings its own problems, and the Europeans, well, Biden has just announced tariffs to stop that wave of imports. Trump has promised even more, but even the Europeans get nervous about particular aspects of China's exports, notably in new energy. And that's the consequence of a major reallocation of resources, which is probably good for China, moving away from rather unproductive investment in empty apartments and in highways that nobody uses towards manufacturing. But internationally, now that China is so big, it causes quite a bit of waves around the world. So how that will play out, I think we leave the international side for the discussion. I want to focus on the domestic side first. And we're not going to have presentations. So we're going to have discussion here. That's what I've agreed with the panelists, and I'm thankful for the panelists for that. We're going to have 2 rounds. We're first going to talk about sort of what happened in the short term on the macroeconomic side, and Loren will talk about the structural side. And then we're going to, well, we're not going to predict, but we're going to look into the future and sort of what can we talk about trends from here to the future. And again, Yongding will take the more short-term outlook on macro and fiscal, and Loren will draw lines on the structural aspects of China's economy, what we can expect. And then we're going to talk about policy a little bit. But I'm sure there will be a lot of people in the audience that also want to talk about policy, because most of you know that we're less than 2 months out of a major event, which for connoisseurs, the 3rd plenum of the Central Committee of the 20th Party Congress. That's a real tongue twister, but it is the key economic meeting in China that is about to happen. And it's been 10 years. The last plenum did not happen really. The last third plenum was used for something else. So it's been 10 years that we've had an economic program presented in a coherent manner from the Chinese government. So it's a big deal. I want to debate a little bit here on stage, but then also get your inputs just to give your perspective, and maybe I'll have a few things to say as well. So, but we start with sort of how did we get here? And I'll first turn to you, Yongding, on looking at the macro picture on sort of where are we and how did we get here? Thanks.
Thank you very much. It's a great honor to be here. Professor Wang Gangwu's speech is inspiring. I learned a lot from you. Thank you very much. I will say a few words about China's economic development, mainly focused on China's macroeconomic policy. China has been really a miracle over the past 40 years, and China registered the growth rate to something like 10% until a global financial crisis. I think there's an important turning point that started, in my view, from 2010. In 2010, China's growth rate is 10.6%. In the first quarter of 2010, the growth rate is 12.2%. But starting from 2010, China's growth rate has been declining, almost on a yearly and a quarterly basis. From 2006 in 2010 to something like 5.2% last year. So this kind of decline is continuously and steadily. So people, I mean, it's very natural, people will ask whether this is something inevitable. It's decided by something fundamental, or this is just policy induced. So there's a very heavy debate among China. Also, I think in Western countries, many people argue that because long-term factors such as aging, such as diminishing return scale, so on and so forth. So it's inevitable for China to, China's economic growth rate will fall. I think, yes, the miracle has ended, it's inevitable. But those long-term factors cannot explain why Chinese economy starting to decline from 2010 on a almost a quarterly basis until last year, 5.2%. You cannot explain that. For example, in 2010, the growth rate is 10.6%, as I mentioned. At time, working age population is something like 780 million. But in 2015, the growth rate dropped to just 7%. But at that year, working age population is 800 million. So how can you use aging to explain this kind of short-term changes? You can't. My view is that these kind of changes actually is policy induced. If I have time, I can elaborate, but I just mentioned two things. In 2008, we come across global financial crisis. So in 2009, Chinese government introduced so-called 4 trillion stimulus package. At the time, budget deficit to GDP ratio is 2.8%. Increase in credit is 9.6%. But very quickly, in 2010, just 1 year, Chinese government started to talk about normalization of the macroeconomic policy, means exit from stimulus package. Why this change? I don't have time to explain, but anyway, it has been decided. So in 2011, budget deficit to GDP ratio fall to 1.1%. Increase in credit fall from 9.6 trillion in 2009 to just 7.5 trillion. And you hit the accelerator, and very quickly you hit the brake. Of course, it caused a problem. Then since then, even though China's inflation rate has been very low, starting from March of 2012, China's PPI entered into negative territory for more than 54 months. Then starting from 2019 June, China's PPI also negative for another 23 months. And starting from 2022 until now, PPI is still negative, which is very obvious. China's economy is facing deflation or quasi-deflation. At the same time, growth rate has been falling. So what should be the right policy response? I think it's very obvious. But Chinese government's policy is not use expansionary fiscal policy and monetary policy to stimulate the economy. The slogan is to cut excess capacity. And Chinese government is very cautious in using expansionary fiscal monetary policy. Why this is the cause? Of course, if we have time, I can explain. Anyway, to a very large extent, why Chinese economy has been falling so steadily until below 5%, very large extent is policy induced. I think I should end here.
All right, thank you. Well, after you declared that it's policy, I'm going to ask for the structural aspects, because I don't think we can completely neglect them, and they may even become more important going forward, but recognizing that the policy setting has completely changed in China over the past decade. Loren is the world authority on China's productivity, I have to say, and in many aspects macro, but also very micro. So I look forward to your insights.
Okay, thank you. I very much again agree that what we're looking at again in China is something that is in fact policy induced. I tend to look at China kind of through the lens of productivity, and productivity is very, very revealing in terms of what's happened over the course of the last 4.5 decades. If we take a look at the first 3 decades, we're looking at 3 decades of where China probably grew at a rate of about 8% on a per capita basis. And that what we know from over that 3 decades of growth, that the most important reason that China grew over that period was because of productivity growth. You look at kind of at the aggregate, productivity at the aggregate was growing at a rate of maybe 3.5 or 4%. If you then go ahead and you add again the benefits that productivity growth was having in terms of helping to maintain very high rates to capital formation and investment, I mean, during the first 3 decades, it's kind of a remarkable number. The rates of return to private sector investment before tax were 50%. Productivity growth, again, in China through those first 3 decades helped to sustain that, and that productivity growth was on the order of about 70 to 75% of all of the growth that we happen to observe. This productivity growth that we observe was relatively broad-based. As we know, it begins in the agricultural sector. We see it in manufacturing, much less in services. It's not only the productivity growth that we happen to observe in each of these individual sectors that's also important, but it's also the kind of the massive reallocation of resources that we observe across this economy that is highly complementary. We have the reallocation of labor from ag to non-ag. That's just part of the process of structural transformation. We have the reallocation of labor and capital from the state to the non-state as part of this process of economic transition. Those 2 transformations, ag to non-ag, state to non-state, these things are are linked again in very, very important ways, and that are just so much again a part again of this process and the productivity growth that we happen to observe. Where's again this coming from? Now I'm going to tell a relatively simple story, and I don't know that everybody is going to go ahead and agree with me on this. But from my own perspective, again, what's so key again to this dynamism that we see are bottom-up reforms. That you have to kind of realize that kind of coming out, so late 70s, early 80s, kind of coming out of the Cultural Revolution, this was an economy where the central bureaucracy was in fact relatively weak. There's an enormous amount of power that in fact kind of resided at the local level. And so we see these decentralizing reforms. What do these decentralizing reforms do? They do lots of things. They give all kinds of more powerful incentives and autonomy to farmers, to firms, to government cadres and officials. They expand the role of the market. They open up China internationally. They open up China, internationally in multiple ways. So provide access again to finance, access to new know-how, access to technology, access to intermediate inputs, at the same time that they're allowing China to better access these opportunities overseas in advanced countries. All of that is just unbelievably important to the structural transformation and the changes that we observe and are just key to the productivity growth that we observe over this period of time. This is not, in some sense, in my mind, there's not a mystery here, there is not a miracle here, but this is just bottom-up policy, also some wise decision-making from the top, that we see a sustainable process that has an enormous amounts of legs. If we get ourselves to 2007, kind of at the time of the financial crisis, and I kind of look forward, it's certainly the work, again, that we've done between 2007 up until 2019. Productivity growth at the aggregate level goes from being about 3.5% to 4% all the way down to 1%. Just in a massive decline in productivity growth, and that you see that with that decline in productivity growth, you just see a very sharp decline in the returns to private sector investment. That is just, in some sense, pivotal. And moreover, that the decline in productivity growth that we observe, this just isn't a thing, again, about the role of the state becoming more important. So we all talk about kind of in Chinese, the Guojin Mintui, state advancing, private sector retreating. When you do the numbers, that what you see is that the decline in productivity that we observe after 2007, most of it is in fact in the private sector. So the problems that China's and the Chinese economy is facing after 2007, these are problems that are in the private sector as well as in the state sector. And so we start to kind of ask ourselves, like, what is going on? Because since certainly 2007, if not before, this is an economy that has done everything or made lots of the investments that we would have expected to enhance productivity growth. They've invested enormously in human capital. They've invested enormously in R&D. So R&D as a percentage of kind of GDP goes all the way up to 2 to 2.5%. They've invested enormously in infrastructure. All of those things that we would have expected to be growth enhancing, productivity enhancing, they're not. And so you just kind of start kind of scratching your head. And then moreover is that when you begin to kind of take a look in terms of where, in some sense, productivity growth in China begins to decline, and you look at China's kind of development relative to the US, is that what you see is that this productivity decline in China is occurring at a much earlier point than what we observe in Korea, Japan, and Taiwan. Now clearly those three countries are kind of select company there, but clearly something is happening. Productivity is declining probably at a much earlier point than what anyone have expected. So over the years, I mean, I've spent a lot of time, so I have kind of a bottom-up, kind of empirical kind of view of China. I've spent early career, I spent a lot of time in farms and doing household level surveys in the countryside. I got tired of farms and I moved to firms and financial institutions. So I've spent a lot of time visiting lots of firms, lots of factories, got to know industries, and that just kind of helped kind of the empirical work that I did. And that what I would argue is that sometime around the mid-2000s, that you begin to see an important policy shift. And you begin to see a shift again in policy that's very much, again, kind of in the opposite, again, of the direction that we had seen before. That you begin to see a policy that is much more top-down, and in part where the state becomes much more, again, influential in terms of its policy making. It's much more influential in terms of the priorities that are being set with respect to sectors, with respect to technologies, with respect to firms. And in part that as a consequence of a set of reforms that occur in the late 90s, early 2000s, fiscal reform, financial reform, downsizing again of the state sector, is that you have now, in some sense, kind of a massive re-centralization that provides the center with the resources and the power that they never had before. And they utilize those resources in all kinds of ways. They have the instruments, they have the tools. They can go and they can support firms in all kinds of ways, through subsidies, through access through land, through access to finance. So they have the tools. At the same time, and perhaps justifiably, there's no new priorities that are being put on indigenous innovation. So innovation, again, by Chinese domestic firms, on developing and cultivating national champions. There's new priorities that are being put on self-sufficiency, insulating, again, themselves, again, from kind of external risks. From the perspective of multinationals in China, that you begin to see that the environment that multinationals are facing, all of a sudden, again, the environment, again, kind of begins to kind of take on new risks. That in terms of what is being demanded, again, often of the multinationals, both in terms of local sourcing requirements, technology transfer, their ability to be able to access the domestic market, that environment changes. And with the course, within about 10 years, is that what you see is just a really kind of radical change in terms of the composition, and certainly in terms of Chinese manufacturing sector and the role of foreign invested firms, and if you kind of take the numbers from the business registry, the number of foreign invested firms in 2018 is actually less than what it was in 2008. So what we observe is a kind of a very important change that happens to be occurring, again, in terms of the policy environment during this period of time. And so that what I would argue is that what you see, that much of this decline that you observe in productivity growth is in part a consequence of that policy, and we see it kind of reflected in all kinds of ways. We see it reflected in issues of overcapacity, kind of the micro work that we're doing. You see it reflected in terms of at the micro kind of dynamics. And so the problem, again, that China is facing today, you know, unfortunately, is that they're facing, again, the cost of some of these policy decisions that they've made. And on top of that, that some of the costs have been reinforced, again, by the policies that we see, the US, as well as by the policy of Europe. And so they face trade sanctions, they face these protective barriers, they face, you know, these sanctions that they happen to be facing. And perhaps, again, expectedly, that what do is that they turn even more inward in that regard. And so China, at the present, that what I would argue is kind of in a very kind of nasty, vicious cycle. We have countries that are competing in industrial policy. Neither of them is going to win in some sense in the long run. And so does it mean that industrial policy doesn't have its role? But it is. It's a cycle. It's a competition that neither is going to win in. And China's in a vicious cycle. And at least at this moment, it's very difficult for me to see what the exit and what the exit strategy is in that regard. So I'll stop there.
All right, we're going to hear that in the second or the third round. But just for clarification, for the non-economists, when Loren says productivity means total factor productivity, how a society uses all of its resources. It's not labor productivity, which continued quite rapidly to increase together with wages because of the heavy investment that China gave. But with this slowdown, and with, if I may say so, a very high savings rate that China has always had, and these very high investments, China's been building up a number of problems, not just the slowdown in growth, the lower total factor productivity, but also a very big mountain of debt, and this swing away from the real estate infrastructure development towards manufacturing has external consequences, as I said, but it's also really, really very difficult internally, in part because of the lack of job creation that manufacturing, modern manufacturing brings. So that's where we are. Now, what are, in your view, the policies in the somewhat short term to deal with this debt, to deal with this local government finance, which plays a big role in there, with the employment situation? How can we gather what China can do in the near future?
I think Lawrence is very eloquent. Actually, you are well expected, highly expected, respected in China. We know your study, you devote your maybe lifetime in studying Chinese economic issues, and you did lots of detailed investigations and so forth. What I'm trying to say is that I'm a macroeconomist. So I just want to see from this perspective, for example, from demand side, from income side, from production side, to add up why this growth rate is just 5% or 6%, so forth. And Loren talked about economic growth. I think productivity, this sort of thing is extremely important as midterm and long term. Actually, as far as I know, almost all countries' productivity has been lower. One of the very important reasons, according to HOFMAN, that is lack of effect demand. This has great impact on labor productivity, on efficiency for capital, because lack of effect demand. So as a macroeconomist, I suggest to the Chinese government, you should use expansionary fiscal and monetary policy to stimulate the economy. People try to argue that China's growth pattern is wrong because China depends on too much investment. Yes, that is right for many years. But you should notice that in 2009, China's growth rate of investment is something like 30.1%, 30.5% in 2009. But last year, just 3%. Starting from 1917, the growth rate of investment has been lower than growth of GDP, and so it's still make a contribution. but the consumption actually starting from 2017 already become the main driver of economic growth. So what I'm trying to say that when there's a lack of demand, Chinese government should, without hesitation, to use expansionary fiscal monetary policy to stimulate the economy. And this year, I think perhaps we will be able to achieve this 5% target. But in order to achieve this 5% target, you need to increase investment. I think that's very important. Especially you have to raise the growth rate of infrastructure investment because there's no better option. Last year, the contribution of consumption to China's GDP growth is 82%. 82%. And this year, it's impossible because this year, the growth rate of consumption will be lower or roughly 5%. Last year, it's 8% because of low base. So in order to achieve this 5% growth target, you can do some very simple calculation, which means you need to have a higher growth rate in investment. And among the investment, because the real estate investment has been falling something like minus 9%, so you have to increase the growth rate of infrastructure investment. In order to finance this infrastructure investment, of course, government has to use more bonds. Chinese government is extremely cautious in terms of using expansionary fiscal policy. They don't want to break threshold 3% of government budget deficit to GDP ratio, 3%. Even European countries already give up this idea, but China is still quite stubborn to follow this fiscal rule. And without break this fiscal rule, without increase further budget deficit, using more bonds, it's not very likely China will be able to achieve this 5% growth target. I'm very glad that the last week, Chinese government issued 1 trillion super long-term bonds. It's very successful. Financial institutions compete to buy bonds. So I think the return is something 2.2%, quite low. So which shows that there's still tremendous opportunity for Chinese government. I mean, tremendous physical space for Chinese government to issue more bonds, to facilitate more investment, to promote economic growth. And also, China can use more expansionary monetary policy. We still have a larger space to lower the interest rate, to increase credit.
Yeah, it's a very important notion for those of you who are not fully familiar. This 3%, which the Chinese somehow took from the Europeans, and even the Europeans have given up on the 3% deficit. Yeah. But of course, in reality, the deficits, if you calculate them according to IMF standards, they're way higher. They're way higher than the 3%. So in part, it is simply to put it on the books rather than below, under the table. But it is the other aspect. I like the investment aspect. I do, of course, like household spending would be a great source as well, but that will take time, because that will take savings rates to change. On the investment side, and Loren has said, look, the returns on investment are going down, and Yongding has confirmed that. But of course, there's still lots of public policy investments that can be done. And one of the arguments that has been around is that, look, China has already committed to net zero by 2060 and lots of energy transformation. What if you accelerate that? What if you take the 100% of GDP in investment that it takes over the next 35 years? You simply front load them. It would be a master stroke in policy, if I can say. But failing that, we're going to talk about policy in a moment. Loren, on current policies, what's China's potential growth rate? Where are we going to end up?
Yeah.
You get the easy question.
No, this isn't an easy one, because in order to be able to even conjecture what I believe the growth rate is going to be, I would have to know what it has been over the course of the last 3 or 4 years. And so I'm one of those who just, having spent lots of time kind of going through the national income accounts, and Bert and I were talking about this the other day. I think there's just lots of academic debates that are going on now in terms of probably since 2008, 2009. What are the true numbers? What is the rate at which this economy happens to be growing? And there's some people who believe that it's been growing considerably slower than what it has. That has all kinds of implications because the kinds of biases that you're talking about, much of it has to do, again, with how rapidly industry is going, kind of on the product side. On the expenditure side, it's investment. So if you happen to believe these kinds of revisions, again, that people are making to the national income accounts, investment is not rising, but in fact, private sector investment is actually falling. So the kinds of stories that we tell depend very much on the integrity of numbers, and we're having a very hard time kind of reconciling and coming to an agreement on what the true numbers happen to be. And I'm kind of in that kind of position.
Yeah, yes. Actually, you criticize China's statistics. I have sympathy with you because I raised lots of questions whether this number is right. Why this year's level, according to your publication, is less than last year, but you still grow? What's the matter? Then, of course, I got lots of explanations. They said that we make adjustment and so on and so forth. So if you really try to groom me about all those figures, I really am not the official from this Statistics Bureau. I'm not in position to answer you. But what for me important is whether, just assume all those figures are correct, whether this kind of figure direct or right. The direction is correct, because I travel a lot. I see different cities and so on. After these 40 years, even the third or fourth tier Chinese county, the building, the construction is larger, more magnificent than middle-sized European cities. You take a fast train, 高铁, it's amazing. The service is extremely good. So you can see by yourself this kind of progress. So based on this kind of personal experience, I tend to believe temporarily on those statistics.
No, so I just also and this is more just a question. I'm not a macroeconomist, but I think one of the issues that those of us that work on China have been looking at are these problems of imbalances. We've been talking about imbalances forever. We've been talking about imbalances for over 20 years. We talked about certain kinds of policy reforms, pension programs, access to medical insurance, all these kinds of policies and innovations that we hope might reduce, again, household savings. So we have very high levels of savings, both at the household level. We have very high level savings often at the business level, enterprise level, as well. And so despite these reforms that we've seen, we continue to be talking again about imbalances. And so when I talk to my macro kind of economists and macro colleagues, to me is that probably what's going on here is that there are sets of distortions. So if we're big believers in distortions, there are distortions that are in some sense affecting the supply side of the economy as well, that those same sets of distortions are also affecting the demand and the expenditure side in the economy as well, to kind of contribute to these imbalances that just seem to kind of persist forever. What those are, I don't believe that we've been able to identify them. We've been talking about the same thing for a long period of time. We've been talking about the same kinds of policy interventions that do not seem to have been able to alleviate, again, these kinds of imbalances. But clearly, figuring out a way to deal with these imbalances is important. Because even now, when we look at some of the kind of the tension, between China, between US and Europe, it has to do that domestic demand is relatively weak, in the economy. That, certainly from the perspective of households who've just realized that their wealth has probably been reduced by 20% because of falling asset prices. Well, in some sense, what's been sustaining, just kind of on the expenditure side of the economy, what has been sustaining, again, the growth that we observe? It's exports. And it's those exports that we've observed, huge increases, again, in a number, again, of exports. Those exports have been extremely, again, important to offsetting weakness in the domestic economy. And it's exactly those exports that are going to give rise to even more kinds of tensions between the United States and Europe and between China. So certainly from China's perspective, figuring out ways to deal with these imbalances. And I'm one of those who certainly don't believe that Chinese growth over the years has been export-led. You look at the expenditure side, in most years its contribution is actually relatively small, but there are periods such as now where it is much more important and it does become a source of international tensions. If China is able to grow at 2 or 3%, I actually believe it would be doing reasonably well.
Sorry, I don't agree. I think as long as the Chinese policy is correct, definitely China will be able to achieve growth rate something at least 4% to 5%. Right. My view is that we can achieve 5%. You talk about the imbalances. Actually, I've been involved in this kind of discussion for 20 or 30 years. I argue very strongly China should rebalance the economy. You are talking about the imbalance. I think perhaps you are mentioning two things. One is consumption against the investment, and also domestic demand against the external demand, right? As for domestic demand, I'm sorry, I still have time? Then I shut up. Then I can say that yesterday, Project Syndicate published one of my pieces. I wrote something like 80 pieces now. You can find out my explanation. I think there's some misunderstanding in China's statistics. You should not take the break because this is China's problem. Actually, China's consumption share of GDP is not as low as people thought. It's much higher. Yes. People said it's 40%. That is based on household saving. You go to a rich people's house, you knock their door, they will not tell you their true income, right? There's another statistic which shows China's consumption, household disposable consumption GDP is something like 60%. And also you compare China's consumption rate with the United States. United States 82% something, China is just 40-something%. But you should notice the structural difference. China's consumption, good consumption consists of more than 60%. Service consumption, something like 40%. United States, 2/3 consumption is service consumption. So the price in China, I mean, service consumption, very low. I am poor intellectuals. I can hire a nanny, right? I can ask cleaners to clean my house every week. But in other countries, it's impossible. It's too expensive. When I was studying in Oxford, I can't go to barber. It's to cut my hair is too expensive. So if you take all this kind of into consideration, China's consumption share is not that low.
Well, so obviously there is a cottage industry on what the numbers really are in China, and it's important to follow. And it has actually policy implications. I always hope that the policymakers have better and more data than we have. But to come to the 2 to 3%, that's actually a prediction of Larry Summers and Len Pritchett of about 10 years ago. So they've been wrong for 10 years because they already said 2 to 3% was then the potential growth rate as per average of developing countries. But it is a fact that, and I did those numbers, so that's a fact, that at China's current per capita income, there's only 2 countries in the world that grew by more than 5% a year the next decade. First was Singapore, and the other was Korea. And it was very different times, very different types of economies. So it is actually really hard to achieve 5% growth. And I think we should no longer expect China, given all the challenges, to be sort of in the 5% range. The 4% range is probably more reasonable. I want to go, because you said 4 to 5 is still possible. So the question then becomes, in the pre-meeting, we have decided that none of us knows what is going to happen in the third plenum. So anybody who does know, please share. But we think that the policy making is quite difficult to track. But we do know a little bit about what should happen. So, Yongding, what is your top 3 of things to do for the Chinese government to reach that 4 to 5%?
Because as I emphasized, I'm a macroeconomist. I entirely agree with Loren said, all those kind of need for the reform, so on and so forth. No question about that. So from my perspective, I think the key is use more expansionary fiscal monetary policy. And China is too cautious. And we still have a quite large space for using these macroeconomic policies. As long as government make a decision bolder, I think really we will be able to achieve something like 5%. Of course, I don't know, but I believe it's sort of philosophy. In this world, nothing is certain except death and tax. So try your best.
Loren.
I'm going to defer on this one.
All right, I have a list of about 20 measures, but I won't go through them here. If you'd like to read it, you can Google it.